So the IFC has been looking at India for a long time. I used to be Mercer. I remember working with the IFC on looking at ESG investing and so on. How have you seen India, the India private equity market evolve in the time that you've been looking after it?
So I have been doing this since 2011, so that's much smaller in the whole IFC horizon. I think the couple of changes that I've really seen is, so 2011 was when Indian private equity was really at the bottom. The world was hammering Indian private equity, sort of saying, what is happening, where is the return? But at the same time, fundraising was still ongoing. I remember in my first year, we backed 7 funds. The momentum and the activity was still there. And then slowly it petered down, and 2012 I think was almost historical in the significantly low amount of money Indian private equity raised. I think it was even less than $1 billion. And from there, all the challenges started surfacing, high valuations being paid, exits not being achieved, no liquidity, and even with the liquidity, no IRR, etc., and the currency depreciation that happened post-2012. And all of that, I think, took a real toll on the industry. We've seen a number of fund managers just shut shop. We have a couple of funds in our portfolio that we know will never raise another fund. Once they're sort of done, they're done. But within all of that, with all of these challenges, we've also seen the industry sort of come up in a new avatar, right? So now, obviously, people who survived are people who were the stronger ones, right? They were better investors for whatever reasons. And then there is a new breed of fund managers that have come up. And then the venture wave, this new round of venture investing looks very different from the earlier one. So there are genuine business models, technology is really being used in a very smart way. Entrepreneurship is peaking, and I think the industry is just adapting itself and trying to come out of the past challenges and sort of embrace the new opportunities that are there.
So on the panel you mentioned that yet you are struggling to find fund managers. What is the issue with the quality of fund managers that you see in India today?
2 things. So honestly, when you're talking to a fund manager, you really want to understand how they're thinking about investing your money. And I said this in the panel as well. I think my biggest challenge is that I'm just hearing the same generic statement again and again. Right? You want to hear something that is their own thought. Like, this is how we've looked at the market. These are the sectors we like. These are the themes we like. Within this, these are the business models we like. This is our strength. This is what the team looks like, right? I mean, fund managers come to us saying we are raising a new fund and you should back us. And I'm like, okay, fine, talk to me. You're a DFI. It's your duty to back me.
So in my experience, on the listed space, they basically just don't have a clear-cut investment philosophy. Do you see the same in private equity VC space as well, that they just don't know how to say, this is how we add value, how we are different, and how we will consistently keep adding value to what we're doing for you?
I think that's definitely true. Unfortunately, in many cases, it's also that they don't know. So there are fund managers who are not able to articulate it because nobody's maybe asked them those questions or asked them to think about it. But there are a lot of people who haven't even thought about it, who just sort of say, oh, there are a lot of companies in India. How difficult is it to invest and make money? Okay. It is difficult.
So the issue is that, you're saying, forget articulation, they genuinely don't have an investment philosophy.
Many
so
of
in
them
that
do.
case, if I say that the quality of Indian managers is yet to mature to, say, developed markets, am I being unfair? Which of the markets have you looked at where you can sort of say it's not quite there yet?
See, as IFC, we are investors only in emerging markets. So we are definitely not comparing with the US or with the UK or the Western Europe. But I think even when we look at China, the clarity with which fund managers approach their investment thesis and portfolio construction is very rare in India. And I think it's probably because Indian private equity, all said and done, is really young. It's 10 years old. And it's not even completed 2 full cycles. The first cycle was a disaster for everybody concerned. So there are a lot bad lessons, but in terms of good lessons, what works, what should we do more, what should we sort of focus on, those lessons are still being learned. And some people have learned them, so obviously there are some very good fund managers. Now the other caveat to this is we are IFC, there are some things we cannot do. So, you know, just because we are not backing certain funds doesn't mean they're not good. It's just that as an IFC, we are doing certain things.
Right. So last question, what would make the IFC put more money into India?
We are putting a lot of money into India.
More money? What?
Oh,
as in,
come
like,
on,
what
we're putting in
improvement?
$3 billion a year into India.
No, but what is there any improvement that you think the industry can make here and now? Whether it's the IVCA, and things that come to mind for me is standardization of data or performance disclosures, articulation of investment philosophy, things like that come to mind straight away for me. What would you say? What would you say to the industry right now watching this video? What should they be doing right now?
Oh, this is for the industry. So it's actually all of that, right? Strategy, how you're doing it, what's your team, and governance, transparency, reporting. And, you know, I don't worry as much about reporting and all, because as an institutional investor, you can actually go in and say, these are my requirements. But in general, you do want to see fund managers have that as a blanket approach. I mean, you don't want to be the only investor dealt with in a transparent manner. You want the fund to be organized in that.
Yeah, I was going to say, it's not fair that only the largest of investors get the reporting. For the ecosystem to develop, you need everyone to have it, right?
You need everyone to have it, and it also makes you more comfortable with who's your neighbor as an LP, and it makes you very comfortable. See, an LP position is a 10-year illiquid position. There is, you know, you just cannot walk out of it. Divorce is very, very painful and very, very expensive. So it's not an easy decision, and it's just easier to take when you have more confidence in the people.
On the panel, you just mentioned that you had the micro issue rather than the macro issue. We talked about the fund managers. Are there any other issues at the macro level that India could be doing better in?
I think the one thing that, and see, again, caveating it with the fact that we are IFC, so we don't take macro views, and we are long-term investors. Private equity funds, it's long-term investment in any case. And on an overall basis, we are very bullish on India. But that said, you know, I'll give you an example, a recent investment. There is a big debate on GST and its impact on either the fund manager or the LP, right? I mean, it's traditionally a 2 and 20 model, and the GST has made it a 2.36 and 20 model. 0.36% added to your cost every year can really hive off a significant portion of your net IRR at the end. So the commercials, in any case, Indian private equity is commercial, not one of the most attractive for a dollar investor. And then you layer on the mandatory 10% withholding tax, and you layer on the GST, and it just becomes a more difficult conversation for many investors. Now we can say we have tax immunities, but not every investor can say they have tax immunities. And so I think with this whole IFSC and trying to pool capital, offshore capital, etc., we might see some of these challenges go away. But I do think the tax environment is a big one. The other thing that we hear from a lot of global LPs, because we sort of keep discussing, is this whole jurisdiction, right? If you're investing in an AIF and it's subject to Indian courts and Indian law, it's unfortunately not something that large global organizations are supremely fond of. You know, the preferences, you go to Singapore, or you take the English law. You know, even Mauritius wasn't a hot favorite with many investors. But to say that your investment is going to be disputed, if it comes to that, in India.
So is it the law, or is it the fact that the courts are chock-a-block and you might not ever see resolution?
It's probably the latter. I'm not a lawyer, not an expert on that, but I think global organizations are just not comfortable signing documents which have a governing law being outside these large Western. It's the enforcement, and I think it's also the comfort, right? You sitting in the US, you're comfortable, you have your lawyer there who understands US, and how do you deal with it in a different market?